Of all the incomes that an individual gets, we have looked at two incomes so far. One is employment income, one is property income. Now, I want to discuss with you a third source of income, which is trading. So, if I were doing my own business, like I told you, I want to start my own business, for example, then I will not be anyone's employee. I will be my own boss. So, that is called self employment, working for yourself. And that income comes under trading income. The trading income, income arising from a trade, profession, or vocation, is assessed as trading income in an individual's income tax computation. In entering into a transaction or a series of transactions, it is not always clear whether an individual is carrying on a trade and therefore assessed to income and NIC, income tax and NIC, or making a capital disposal which may be charged to capital gains tax or is exempt from tax. If I am disposing of a property one-off, okay, then that will be capital gains. But if my business is buying and selling properties, then the sale of property cannot be considered as capital gain. It's like, I'm buying and selling bananas. I purchase 10, I sell 10. That buying and selling fruits is my business. Similarly, buying and selling properties is my business. Okay. And when we look at that, we should understand that this trading income calculation is the total receipts from my business, subtract the total expenditures incurred to earn that income, and you arrive at the trading income. So, how do you deal with it? Calculate tax adjusted trading profits, calculate the capital allowances available, deduct capital allowances, and then calculate tax adjusted trading profits. Now, what are capital allowances? We discussed that when we were doing employment income. Key income tax authorities, they are not okay with the approach to depreciation taken in accounting standards or in company law. They say in company law, use WDV method or use straight line method, and this should be the rate, and this should be the assumed useful life and all of that. The tax authorities are like, we don't go with their numbers. We have come up with our own rules. And that approach to calculating depreciation under income tax is called capital allowances. Okay. In India, we call it income tax depreciation. In the UK, we call it capital allowances. Okay. Let me show you how exactly is how exactly is trading income calculated. Okay. In your profit and loss account, write down sales. ठीक है, परचेस डेबिट साइड, ये कंपनीज एक्ट का डेप्रिसिएशन 200, योर अकाउंटिंग प्रॉफिट इज 500. ठीक है, एंड डेप्रिसिएशन अलाउड फॉर टैक्स पर्पसेस इज 240. The first approach to calculating the trading income is called the top down approach. You start from the top, which is 1000 sales, and deduct only those amounts which are allowed as a deduction. See, in Companies Act ka depreciation is not allowed as a deduction. So don't subtract 200. Purchase cost is allowed as a deduction because it is directly connected with the business. 1000 minus 300. And while Companies Act ka depreciation is not allowed, income tax ka depreciation is allowed. So 1000 minus 300 minus 240 gives me my taxable income of 460. ठीक है, top down. Take the total income and from that only subtract those items which are allowable as a deduction. ठीक है, depreciation as per books of accounts, tax authorities have pure hatred for this. They specifically prohibit you from deducting the accounting depreciation from total income. Tax authorities say that we will allow you to deduct depreciation as per our rules. And our rules के हिसाब से the depreciation is 240. Don't subtract the depreciation as per company law rules. ठीक है. Second approach is the bottom up approach. Start from the bottommost number, which is what? Which is accounting profit. ठीक है. Bottom up. Add back all the disallowed items and deduct all the allowed items. What are disallowed items? 200 is a disallowed item. 500 में 200 add करो. ठीक है. And deduct all the expenses which are allowed but not included here. 500 में 200 add करो because it is not allowed as a deduction in income tax. Add 200 and then subtract 240, which is allowed, which is the capital allowances. So 500 plus 200 minus 240, you get 460. So when you do bottom up, Start with net profit. This is accounting profit. While arriving at this accounting profit of 200, sorry, 500, depreciation of 200 was deducted. So when you are trying to calculate taxable income, 500 में 200 add करो because it was disallowed. 240 subtract करो and you will get your right. You will get your final answer of taxable income. ठीक है. एक बार have a look at the bottom up approach. ठीक है. Okay. Now, this is a big list, which is tax adjusted trading profit. First thing, allowable expenditures. Those items which are allowed to be subtracted from total income to arrive at taxable profit. Accounting income में से what are the amounts that you can subtract to arrive at taxable profit? These are expenses incurred wholly, exclusively, and necessarily for running the business. Specific business related expenditures like salary of staff, rent of factory, stationery expenses should be incurred wholly, exclusively, and necessarily for the purpose of trade. So if it is not incurred for the purpose of trade, then don't subtract it. Okay. So these are allowable expenditures will be subtracted from accounting income to arrive at taxable profit. Then there are certain disallowances. What is a disallowance? Amount that is not allowed to be subtracted from accounting income to arrive at taxable income. For example, a penalty that has been imposed on you by the government for some non-compliance. Okay. In your accounting P&L, you will debit it to P&L because it is an expense or a loss. But while calculating taxable income, the tax authorities specifically tell you do not subtract this item. That is a disallowance. Okay. So when you are doing the top-down approach, if there is a disallowance, like for example, ये जो कंपनीज एक्ट वाला depreciation है, this is a disallowance. So see, in the top down approach we did not subtract the 200 वाला depreciation, but when you are doing the bottom up approach, add back. See, while we were doing the bottom up approach, we added back the disallowed amount of accounting depreciation. Okay. So if there is a disallowance, you are going in the top down manner, do not deduct. If you are doing the bottom up manner, please add it back. ठीक है. Now have a look at this list of items which are specific disallowances. एक बार देखो इसको. So this is a list of all of those expenses which are not allowed to be deducted. ठीक है. Okay. Now Additional trading income. See, these are amounts which are recorded as an expense, now being recorded as income. What is that? Goods for own use. When you purchase goods for the business, say for example, Antara has a beauty salon. Okay. She purchases some creams and oils and all of that to be used in the salon, and at that time, she records an entry purchase account debit to supplier. Now she wants to go for a party, so she takes one tube of some moisturizer from the business. ठीक है. Goods for own use. This is that category. Earlier considered as an expense, now you are calling it income. ठीक है. This is goods for own use drawings. At sales value if not recorded at all. If you had not recorded the item in the first place, then include the sale value. Add profit if recorded at cost. So, uh, when she purchased it, she recorded an entry for purchases, purchase account debit to supplier. Now she is withdrawing it uh, for her personal use, whatever is the profit on that transaction. That's and how do you arrive at the profit? Normal sale price minus this, that amount will be added. अब ये जो इतने minute adjustments है ना, ये ATX level में नहीं आते हैं. These are adjustments more for skill level students, not so much for you. You should just know that if goods are taken for own use, add sales value if not recorded at all. And if the withdrawal entry has been recorded, how do you record the withdrawal entry, by the way? See, drawings का entry क्या होता है? Drawings to cash. ठीक है. If goods are withdrawn for personal use, the entry is drawings to purchase. If the drawings to purchase entry has been recorded, so on one hand, you recorded a purchase entry, purchase to cash. Expense of 1000 was recorded. Then you recorded the drawings wala entry, drawings to purchase. So 1000 ka debit, 1000 ka credit. It has been removed from books of accounts. Then sale value of that tube of moisturizer will be added to total income. If so if the entry is not recorded at all, then sale value will be added. If the withdrawal ka entry has been recorded, 1000 ka purchase and 1000 ka drawings, then the profit element should be added. So if the tube of moisturizer is normally sold in the market for 1200, 200 ka profit element should be added. If the withdrawal entry is not recorded, so Antara only recorded the purchase entry, purchase to supplier. She did never recorded the drawings to purchase entry. Then in that case, the normal sale value should be recorded, which means you will record 1200. So 1200 ka sale value, samne 1000 ka purchase value, 200 gets added to your total income. Here, if the withdrawal entry is recorded, that means 1000 purchase debit to supplier 1000, and then what is the withdrawal entry? Drawings to purchase. ठीक है. So 1000 का डेबिट 1000 का क्रेडिट नलिफाई हो गया, 200 का प्रॉफिट एलिमेंट ऐड करो एंड क्लोज इट. ठीक है. Then additional expenditure not recorded in P&L to be deducted to arrive at profit and loss. ठीक है. What is expenditure not recorded in P&L? Capital allowances are not recorded in P&L. ठीक है. Then lease premium on short-term lease is not recorded in P&L. So these are items which are not in the accounting P&L, like capital allowances not in the accounting P&L, but it has to be subtracted. That is additional expenditure. And then the last is non-trading income. What is non-trading income? Amount recorded in P&L as income, but which is not trading income. जैसे have a look at this. Sales is 100, interest income is 10, allowable expense is 50, accounting profit is 60. I want to calculate taxable trading profit. How will I do it? See, 60 ka accounting profit includes 10 ka interest. So subtract this 10 ka interest from 60, you will get 50 as your trading income. ठीक है. And then in the tax computation, add 10 as income from interest income करके अलग से add करो. So total income पे there is no impact, but you are just separating it out because interest income of 10 is not your trading income. उतना ही difference है. ठीक है. अब see, once you do this now, once you revise this, you get an idea ki how is the trading P&L actually presented. Once you know how the trading P&L is actually presented, then you can make any adjustments in the paper. Okay? With me? Okay. Now in tomorrow's discussion, what we are going to do is, we are going to study all aspects of trading income. In the sense, capital allowances, what is allowed, what is not allowed. We'll keep tomorrow's session at 6:30 only. Today I had some urgent work, which is why I had to reschedule the timing. Tomorrow we'll keep it at 6:30 only. We'll do 6:30 to 8 tomorrow. We'll finish revision of the entire trading income part. So before coming to tomorrow's class, it would be great if you can just go through the trading income part once. आज हमने बेसिक देख लिया, कल हम पूरा उसका एडवांस डिस्कस करके we'll finish off the discussion. Works? Cool. And timing for the